Imagine turning $10,000 into over $100,000 in just 2 years. Sounds too good to be true, right? Well, that's exactly what happened to investors who put their money into Nvidia stock back in 2022. But here's the kicker. This AI-driven growth is just getting started. The global artificial intelligence market is projected to explode, growing 12 times larger over the next 8 years. That's a staggering compound annual growth rate of nearly 37%, 3 times higher than the S&P 500's average return over the past 15 years. Today, we're diving deep into the 4 best AI funds you can buy and hold forever. This data-driven selection maximizes AI exposure while fortifying your portfolio. Perfect for long-term success in the AI era, beginner or pro. The AI revolution isn't just hype. It's fundamentally reshaping industries across the board. From healthcare to finance, transportation to entertainment, AI is driving innovation and creating enormous economic value. Picking individual AI stocks can be risky. The technology is evolving so rapidly that today's leaders could be tomorrow's laggards. That's why a carefully selected mix of funds can be a smarter way to invest in this trend. You get broad exposure to the AI ecosystem while minimizing the risk of betting on the wrong company. Now let's break down our 4-fund AI investment strategy, starting with a solid foundation. Fund 1. NASDAQ 100 Index Fund. The NASDAQ 100 Index Fund tracks the 100 largest non-financial companies listed on the NASDAQ stock exchange. While it's not an AI-specific fund, it's heavily weighted towards tech companies that are leading the charge in AI development and implementation. Here's why the NASDAQ 100 is such a powerful foundation for an AI-focused portfolio. 1. Tech-centric holdings. The fund's top holdings read like a who's who of AI leaders: Microsoft, Apple, Nvidia, Google, and Amazon. These companies are investing billions in AI research and development, and they're already seeing significant returns on those investments. 2. Outperformance. Over the past 15 years, the NASDAQ 100 has grown by an average of 19.4% per year, compared to 12.6% for the S&P 500. That's about 50% more growth each year. 3. Global exposure. Unlike the S&P 500, the NASDAQ 100 includes non-U.S. companies. This gives you exposure to international AI leaders like ASML, a Dutch company that makes crucial equipment for advanced chip manufacturing. 4. Focused but diversified. With 100 companies, this fund offers enough diversification to mitigate risk, but it's focused enough to capture significant upside when tech stocks rally. The NASDAQ 100's performance speaks for itself. In 2023, when the S&P 500 grew by an impressive 26%, the NASDAQ 100 absolutely crushed it with 54% growth. That's more than double the returns during one of the best years in stock market history. By making the NASDAQ 100 the foundation of your AI investment strategy, you're positioning yourself to benefit from the broad tech ecosystem that's driving and benefiting from AI advancements. All right, let's move on to our second fund, which takes us deeper into the heart of the AI revolution. While the NASDAQ 100 gives us broad exposure to tech leaders, our next fund zeroes in on the companies that are quite literally powering the AI revolution. These are the firms creating the advanced chips and hardware that make AI possible. Fund 2. VanEck Semiconductor ETF, SMH. The VanEck Semiconductor ETF, ticker symbol SMA, tracks the largest chip companies listed on major U.S. exchanges. Here's why it's a crucial component of our AI investment strategy. 1. Concentrated exposure. SMH only tracks 25 companies, making it a very targeted fund. This concentration allows it to capture significant upside when the semiconductor sector rallies. 2. Top holdings. The fund's top 5 holdings: Nvidia, Taiwan Semiconductor, Broadcom, AMD, and ASML, make up about 51% of the fund. These companies are at the forefront of developing the advanced chips needed for AI applications. 3. Strong performance. SMH has a track record of delivering impressive returns. Year-to-date, it's up around 54%, and over the past 5 years, it's delivered a whopping 370% return. 4. Future growth potential. The global AI chip market is expected to grow more than 11 times larger over the next 9 years, with a compound annual growth rate of over 31% through 2033. SMH is well positioned to capture this growth. 5. Low expense ratio. With an expense ratio of just 0.35% per year, SMH is a cost-effective way to gain exposure to this high-growth sector. The semiconductor industry is crucial to the AI revolution because these companies are building the chips that train and power large AI models like GPT-4, Claude, and Google's Gemini. As AI continues to advance and become more complex, the demand for more powerful, efficient chips will only grow. By including SMH in your portfolio, you're investing in the backbone of the AI industry. These companies are providing the computational power that makes AI possible, and they stand to benefit significantly as AI adoption accelerates across industries. All right, let's move on to our third fund, which takes a broader approach to capturing the AI opportunity. While semiconductors are crucial to AI, they're just one piece of the puzzle. Our next fund takes a more holistic approach, aiming to capture value across the entire AI ecosystem. Fund 3. Roundhill Generative AI and Technology ETF, CHAT. The Roundhill Generative AI and Technology ETF, ticker symbol CHAT, is designed to track companies actively involved in 4 different areas of generative AI. Here's why it's a valuable addition to our AI investment strategy. 1. Comprehensive coverage. CHAT invests in companies across 4 key areas of generative AI: platforms, infrastructure, enterprise software, and consumer software. This broad approach helps ensure you're exposed to various aspects of the AI value chain. 2. Top holdings. The fund's top holdings include tech giants like NVIDIA, Microsoft, Google, and Meta platforms. These companies have vast ecosystems that span from consumer applications to the underlying infrastructure powering AI. 3. Balanced allocation. Unlike some tech funds that heavily favor software companies, CHAT maintains a balanced allocation across hardware and software players. This approach recognizes that the most successful AI companies often have strengths in both areas. 4. Active management. CHAT is actively managed, which means its portfolio is regularly adjusted to reflect the rapidly evolving AI landscape. This can be particularly valuable in a fast-moving sector like AI. 5. Growth potential. The global artificial intelligence market is expected to grow 12 times larger over the next 8 years, with a compound annual growth rate of almost 37%. CHAT is designed to capture this growth across multiple segments of the AI industry. While CHAT has a higher expense ratio of 0.75% compared to our previous funds, this reflects its active management approach and more specialized focus. Since its launch in May 2023, CHAT has returned around 40%, demonstrating strong performance in its short history. By including CHAT in your portfolio, you're gaining exposure to a wide range of companies driving and benefiting from the AI revolution. This fund can help you capture value whether it's created in infrastructure, platforms, or applications. Now, let's move on to our final fund, which focuses on a critical aspect of the AI revolution that many investors overlook. As AI becomes more prevalent, it's not just creating opportunities, it's also introducing new challenges. Our final fund focuses on a sector that's becoming increasingly crucial in the age of AI, cybersecurity. Fund 4. Wisdom Tree Cybersecurity Fund, WCBR. The Wisdom Tree Cybersecurity Fund, ticker symbol WCBR, is designed to track companies at the forefront of the cybersecurity industry. Here's why it's a crucial component of our AI investment strategy. 1. Growing threat landscape. The rise of AI has led to a significant increase in cyber threats. There's been a 12-fold increase in phishing attempts, a 75% increase in data theft and extortion, and even the emergence of AI-powered build-your-own ransomware services. 2. Non-discretionary spending. Cybersecurity is one area where companies can't afford to cut corners. As AI systems handle more sensitive data and critical operations, robust security becomes even more essential. 3. Diverse coverage. WCBR focuses on multiple aspects of cybersecurity, including access management, identity protection, endpoint protection, and cloud security. This diverse approach helps capture growth across various cybersecurity submarkets. 4. Growth potential. The global cybersecurity market is expected to more than double over the next 8 years, with a compound annual growth rate of 11%. However, specific segments like cloud security are growing even faster, with expectations to 6x in size over the same period. 5. Carefully selected holdings. WCBR holds 25 companies at a time, with 20 of these offering products and services that fit at least 3 of the fund's 8 cybersecurity themes. 17 of the companies in the fund have a compound annual revenue growth rate exceeding 20%. 6. Top holdings. The fund's top holdings include cybersecurity leaders like Palo Alto Networks, CrowdStrike, Zscaler, and Datadog. These companies are at the cutting edge of developing AI-powered security solutions. 7. Reasonable expense ratio. With an expense ratio of 0.45%, WCBR offers specialized exposure to the cybersecurity sector at a reasonable cost. By including WCBR in your portfolio, you're not only investing in a critical component of the AI ecosystem, but also hedging against some of the risks introduced by widespread AI adoption. As AI systems become more complex and handle more sensitive data, the companies providing robust security solutions stand to benefit significantly. And there you have it, 4 carefully selected funds designed to give you broad, diversified exposure to the AI revolution. Together, these funds offer a balanced approach to investing in AI, capturing potential growth while mitigating some of the risks associated with betting on individual companies in a rapidly evolving field. Remember, the AI revolution is just getting started. By positioning your portfolio now, you could be setting yourself up for significant long-term gains. But as always, do your own research and consider consulting with a financial advisor before making any investment decisions. Thanks for watching, and I'll see you in the next video.